2026 is looking to be a very competitive year. Not only are vacation rentals competing with other vacation rentals, now vacation rentals are also competing with hotels. Hotels are also competing with other hotels and such. This is the best truth that I can envision. Hi there, this is Jing again with the Bali Business Review. I'm back in California, and I'm going to be supplementing the next few episodes with some visits over to Google, to the University of California at Berkeley, to the heart of Silicon Valley, where the AI revolution is going to have massive global impact upon all manner of where people make decisions, especially on how to travel, and of particular interest to any investor who's looking to be on the leading edge of where this technology might take us, and in regards to their own property management or holiday investment. Now, we're going to go deeper into a story that a lot of the marketplace has been talking about over the beginning of the year, which is, why is the occupancy and the rates so low now compared to any previous year? We ourselves at Book Vista have also noticed that there is an unusual trend of where lower prices is not gaining higher occupancy anymore, even though flights to Bali are reaching record levels. So the facts are very indigestible until you do a bit of deeper analysis and you start realizing that there is an unaccounted for new factor to the oversupply situation. So, as we've discussed previously in this channel, the oversupply situation in Bali happened over the course of post-COVID. During the initial years after COVID, investors who had made investments during COVID profited tremendously from being able to leverage the time value of land by 100-fold. Some of the smarter investors decided that they would build properties and then sell these leasehold properties to future investors, further investors down the line, to also operate vacation rental properties from. Thus, with the placement of platforms like Airbnb and Booking.com and Traveloka, and the proliferation of social media accounts, it was quite simple for anybody with just relatively basic experience to gain an investment property in Bali, thus getting the best of many worlds. And who would argue that that was a bad decision back in a time when there was turmoil in Ukraine and the European markets weren't doing very well? It made pretty good sense to put your assets into a high-yielding property in Bali. Since that time, we all know that there is a drastic oversupply situation. This oversupply situation has been mostly centered around the vacation rental marketplace, which means that most of the people who are building and constructing new properties are those who are building holiday homes, villas, and guest houses. These are very rarely large-scale operations of 100-plus room hotels, even though there are some notable examples that are under construction by, I believe, the Miro Group and some other groups elsewhere. Thankfully, some of these projects have already failed, which means that they will not be adding any more new inventory to the market, thus destabilizing the market even more with more oversupply. However, one factor that I had predicted just a few months ago has had more than its weight in changing the market dynamics and lending to even greater oversupply. This has been the introduction of hotels into the marketplace. Now, you might ask, well, hotels have always been there, and so what's the difference? Yes, hotels have always been there, but hotel owners have never been more motivated to gain revenue from their, forgotten assets in Bali. If you've watched another previous episode of mine from last year, you'll understand that the management company and the hotel owner are in Indonesia and in Bali often different entities. Owners of hotels in Indonesia tend to be, wealthy tycoons who have interest in palm oil, coal, rubber, paper pulp, and other industrial exports that they usually sell as commodity items to other countries. Well, being things are the way they are with the US-China trade war, many of the orders for these type of commodity inputs were canceled as factories in China took less and less orders from I guess, the American marketplace. So the owners of the factories, and thus also the owners of these hotels, are looking and scrambling to find revenue from whichever direction they can. And so they are now pressuring their managers to lower prices. They want to gain revenue instead of having their ego stroked by being told of how luxurious their brands are. And so now you're seeing real hard discounts being given by even some of the more established brands. And you can just simply look on any booking platform for any available dates, or set your email inbox for fare alerts whenever there's a discount, to understand the intensity of how willing accommodation providers in the hotel and hospitality segment are willing to cut prices in order to gain market share back. This, of course, is the only possible explanation for why both lowering prices doesn't raise occupancy, and yet travelers are coming to Bali in record numbers. Now, the long-term effect of this will be as such. Those who have entered late in the market are going to feel a squeeze from having to develop a brand at the time when their entry points were at the most expensive, and their exit points, meaning that the daily rates that they can rent out their properties, are now at the most low levels. Now, as being a business channel and having had over 20 years of experience and entrepreneurship in Bali, I can attest that most businesses, including those owners that are looking to start vacation rentals, do fail within the first 3 years. This is pretty typical of any type of business. Now, it's going to be a sink or swim new year. I think the competitive pressure to be able to dynamically price, find opportunities, give more value to customers is going to ultimately create a cycle. The cycle will probably be as such. This discounting will ultimately drive larger and larger groups of travelers to choose Bali and overpower new regions in this area, such as Vietnam and Phuket, and also Thailand with Bangkok, Koh Samui, and the southern Thailand islands. This is a pretty normal process of exchange in which these vacation rental destinations often trade off guests from season to season, depending upon how much value they offer. But we're probably going to see larger amount of island-wide competitiveness against other holiday destinations. But we're going to also see a shrinkage of less competent investors that will look for exits, find out that the exits are fully blocked now in trying to sell their properties or at least long term, and slowly have to face the reality that the winter is coming and low prices are better than no prices and no revenue, because they now then begin the season for the revival after this period of time. The real message I want to send is this: 2026 is looking to be a very competitive year. Not only are vacation rentals competing with other vacation rentals, now vacation rentals are also competing with hotels. Hotels are also competing with other hotels and such and such and such. So I think it's going to be a bonanza year for any traveler looking to have a holiday in Bali. I estimate this process will probably take about 6 months to a year before the market is flushed out, and look forward to updating all our viewers on the Bali Business Review for whenever things do get better. Okay, I know this is probably not the message anybody was hoping to get at the beginning of the year, but from the looks of it, this is the best truth that I can envision at this point, given the facts that we have at the moment. All right, this is Jing again for the Bali Business Review. Keep watching, and if you enjoy these episodes, please don't forget to like, comment, or subscribe. We're almost up to 20,000 subscribers at this point, and I want to thank everybody for making this channel a enduring success. All right, Om Santi, Santi, Santi Om.